Hi everyone, thank you so much for joining us today. My name is Hannah Mollison. I am the Sales Director here at Workwell Outsourcing, and I'm really pleased to be presenting this podcast where we'll be discussing the pending NI increases and what it means for recruitment businesses and how recruitment businesses can overcome the challenges of the cost implications of this. This webinar is part of our educational series from the Workwell Outsourcing Academy, specifically for recruitment agencies to support their growth, provide value and industry insights. All of our webinars and our podcasts are available either on our YouTube or our Spotify. So if you'd like to catch up on any previous episodes, there's lots of content there. And for those of you who don't know the Workwell Group, we are the UK's biggest service provider for recruitment agencies. So from funding, tech, outsourcing to international, EOR and UK umbrella. Our goal is to enable agencies to focus on their core business of recruitment while we handle all the key operational functions. So, as I said, thanks everyone for joining us today. I am joined by our Workwell Outsourcing MD, Yves, and also our FD, Matthew. So guys, thank you so much for joining me today. Really appreciate you taking the time out to discuss the NI increases and how recruitment businesses can kind of overcome the challenges that they're going to face with it.
Thank you, Hannah.
Thanks, Hannah.
So first of all, Yves, would you like to give a bit of background on your experience to date and why your knowledge is so valid with the conversation that we're going to have today?
I'd like to think I know a bit about NI. I've been in the recruitment space for well over 20 plus years now, always based in the back office, which is everything finance, compliance, and technology, should I say. So the infrastructure that supports the business. Probably for about 17 years, been working with Big Co, so really large recruitment businesses like Adecco, or is in the back office running the shared service center and managing the finance functions would have been my space. 7-8 years ago, I started consulting, and that consultancy was in supporting businesses, medium-sized and large businesses, in transformation projects, which would be changes of systems in the back office, maybe a CRM together with a middle office, as well as an accounting package, and helping them make that process successful. Sometimes it would be a transformation project that is really cost-based, so it's outsourcing, and eventually then led that business into what is Workwell today, Workwell Outsourcing today, because we've got a good client list, and it moved from consultancy to really what is now a business employing over 200 people, both in the UK and in other places like India. So NI is something that I've come across a lot of times in terms of changes, supporting businesses with contractual bits from legislation. So this is nothing new. AWR was another one, very, very similar to the kind of problems that we come across all the time.
That's brilliant. Thanks, Yves. Lots of very valid experience. And Matt, would you like to give an introduction to your experience and why it's valid to today's chat?
Sure. Yeah. My background is in the accounting profession, so I'm a chartered accountant. I finished my career in practice as a head of tax at one of the accounting firms in Leeds. I'm also a chartered tax advisor. So obviously I was dealing with tax matters in general for a whole range of different clients across all sorts of sectors in that world. About 10 years ago, I moved into industry and I've been running companies in various sectors since. My day job here at Workwell is managing our internal finances, and of course we face some of the same challenges with legislative change and increases in taxes that our clients do. I also assist some of our clients with their own internal forecasting, budgeting processes, and I'm available for sort of kind of non-fractional finance director work with them. So I'm also used to seeing you know, how the business model of our client agencies works. So this is something that you know, I get involved with from a number of different angles.
That's brilliant. Thanks, Matt. So I think what we're discussing today is a really important topic for recruitment agencies, and it's something that they really do need to be aware of, and they need to make sure that they've got measures in place to ensure that their business continues to be successful and thrives with the changes coming into place. I think a good place for us to start, Yves or Matt, would be to discuss what the changes mean for recruitment agencies and what those changes are coming up in April.
Yeah, absolutely.
Big on that.
I mean, the key change we're talking about today is that essentially the rate of employers' national insurance are going to have to pay on their workers, which temporary candidates and their own internal staff, has been increased to 15% in the last budget, which comes in the next tax year. And beside that, there was also a change to the employment allowance, which was increased to £10,500 maximum from £5,000 maximum. So those are the basic changes. The industry that we're in, as everybody will know, the margin that someone is making on their temporary contracts is a really key financial metric. So that increase in cost is going to hit that, and it's important that our clients and agencies manage the impact of that, both on their direct costs, the cost of their candidates they're placing, as well as on their overhead, on their internal costs as well. That's the key that they need to look at.
Yeah, and I think that's what we're going to.
The other addition to that, Hannah, as well, is the threshold is changing. So
yeah.
Whereas at the moment we have a threshold of £9,100 before an employer starts paying employers' national insurance, that is now dropping to 5,000. So that means not only is your 15% an increase from 13.8, but you're actually having to pay that amount a lot earlier in terms of threshold. Before it was 9,100 a year, now it's £5,000. So you're actually paying a lot more. If you think of a minimum wage worker, you're probably paying £770 more a year per worker. So it's significant if you have a quite a significant workforce.
And I think that's a really valid point, because I think everyone is thinking about the increase in NI, but they're not actually thinking about the threshold coming down. So it's twofold. It's not just the increase, it's the threshold. So it's another thing that needs to be considered. So Yves, do you want to talk a bit about how this is going to have an effect on recruitment businesses and business in general, I guess, for that matter?
Yeah, so business in general, it's obvious, it's your employees. Your payroll cost is going to be higher. But in recruitment, we need to think about what recruitment businesses do. We place people to end clients, and you charge a fee. So now all of a sudden it's affecting your GP, right? Because your gross profit, as we call it in recruitment, your gross profit report is a function of your payroll cost and your charge rate. So if your payroll cost is going up because of employers' national insurance, then your GP is going to be reduced, unless, of course, you can do something about that cost. Either your client does something in increasing the charge rate, or you're doing something decreasing the pay rate. So with recruitment businesses, it's not only your employer cost to think about, your staff, you also have to think about your actual business, which is placing candidates to your customers. Doesn't affect perm. If you're a perm business, that's not a big deal. But certainly if you're in contract, so you're doing temps as well as umbrella, because it affects umbrella candidates in terms of their pay rate, in terms of how agencies calculate that. So the critical thing is, what is your rate? How is this going to affect your charge rate? How is this going to affect your pay rate, which in effect is your gross profit?
Yeah. Okay, brilliant. Thanks, Yves.
Do you have anything sort of sectors? Sorry, Hannah.
I was going to say, do you have anything to add?
Yeah, thanks. I was just going to say, which sort of sectors do we think will be more heavily affected within recruitment? Thinking in terms of construction, hospitality, logistics, versus maybe locum doctors or supply teachers. So some of those sectors operate on tighter margins. The candidates are closer to minimum wage. They have less scope, if you like, to adjust to mitigate this. I was just wondering, particularly for you guys, which sectors in your view you think you'd be more badly affected?
I mean, for me, I would say healthcare, construction, any kind of shift work.
Yeah, I think it's where you have a high PAYE base and low margins. So if you think of low margins vendor management, so if you're probably supplying through vendor management solutions, they will manage the rates already. They tend to be good at doing this in terms of looking ahead at statutory changes and applying that and discussing that with the customers. So your margins should stay the same, but if it's not, then obviously you've got a problem because the margins are very thin in that kind of business. But again, we know that construction, blue collar work, certainly the margins tend to be thin. So you really need to be on top of this, because if your customer is not expecting it or hasn't done anything about it, hasn't discussed it with you, then you could see your margin wiped down.
So I guess terms of business become important.
Yeah, so should we talk about margins in a bit more detail then? So if an agency can't pass on the additional costs, what could be something that they could do to potentially absorb those costs, and what strategies could they adopt for that?
I'd like to think every agency can pass on the cost. It's a legislation cost. It's contractual. It should be contractual. So I think step one probably is to say to every agency, does your contract cover you on legislation changes? If you're probably using one of those APSCO RAC contracts, it'd probably be standard in there. Certainly if you're using one of our contracts, it's standard in there that legislation changes are passed on to the customer. But you still have to have the conversation. So step one would be a conversation with your customer to remind them of the contractual implications to the change in legislation. If you don't have it in your contract, then that conversation might be a bit harder.
Yeah, and would you have any tips for how recruitment business owners can approach those conversations with their clients?
Yeah, I'd say if it's in the contract, then it's going to be, especially with your significant customers, not a letter. It's just going to be a conversation. We tend to have conversations with our customers on any complex changes like that. So I'd say a conversation first, and then something in writing after that to follow up, because it's going to happen in April. People forget. So if you're having the conversations and then followed up with something in writing to make sure it's documented, then hopefully your credit control is not going to have a hard time with changes in rates after that. So that would be the process: conversation followed by something documented to reference the clause that you're talking about. If you don't have it in your contract, then I think you need to have those conversations ASAP, and I'd say you'd want to change your contract for the future.
Yeah, the key points to take away there are, first of all, review and recheck your contracts to make sure that you have got the clauses in there. Have those conversations with your clients as soon as possible. Don't delay it. And thirdly, any Workwell outsourcing customers, if you want any support or guidance on having those conversations with your clients, reach out to us, because we'll happily support you on that.
Yeah, and if you're not a Workwell customer and you need help with it as well, you know, we help many agencies with just questions that later do become our customers in any case. So yeah, not just Workwell customers.
Absolutely. So what other methods can recruitment businesses look at to mitigate the changes? I think one important one to talk about would be leveraging umbrella arrangements.
Especially because we're an umbrella. So probably my umbrella side might not be so happy with me here, but yeah, we agencies know that umbrellas are a friend as much as they are an enemy. If it's a friend, then it's a good umbrella, is compliant and everything. So compliant umbrellas know that there's a situation here to deal with NI for the candidate. Somebody's going to have to take the cost, right? If your client can't take the cost, then it's a conversation you could be having with the umbrella. We know that there's a threshold to play with that umbrellas can manage. And if you think about your pay rate, is always going to be pay plus NI, plus holiday, plus NI, plus pension, right? If you're using percentages, which is 13.8 or 15%, you're not counting the threshold. So there could be some room to play with on the threshold. And those conversations with a good umbrella that you're working with, those would be well understood in terms of conversation. So if you don't have it in your contract to pass on to the customer, maybe you could leverage a conversation with your umbrella to help you with that, especially when you're talking about minimum wage workers.
Yeah, it's definitely something worth reviewing, and also ensuring that you're working with a compliant umbrella as well.
100%.
How feasible?
The non-compliant umbrellas, probably this won't affect them, right? Because NI doesn't matter in that case anyway. So, but if you're working with compliant umbrellas, this will matter, and they will be very happy to have this conversation with you, I'm sure.
Yeah.
Actually, somebody changing from pay-as-you-earn to umbrella be on this then, Yves? That's something people should look at.
Yes, absolutely. Because if the candidate is PAYE with you, you're the one covering the NI cost. And actually, the benefit of the threshold is with you, right? With you, the agency. If somebody's moving from PAYE to umbrella, depending on how you're calculating the threshold, depending on whether you consider the threshold or not in your calculation, which most agencies don't, they just take the percentage of NI, then you're passing on the advantage of the threshold to the umbrella. So that's why leveraging that conversation with the umbrella can be quite advantageous in terms of at what rate do they take a worker at minimum wage, say, for example.
Yeah, I think agencies really need to have a clear understanding of at what point the national insurance threshold kicks in, and what that would look like on an umbrella model and what that would look like on a PAYE model. So I think for recruitment businesses, it's a case of understanding those calculations, sitting down and then reviewing it and seeing if it's worthwhile utilising umbrella for it and getting some illustrations.
Yeah, any compliant umbrella will talk you through that. Because they will have a calculation that says, you can't give us a worker below this rate because we have to accrue holiday, and we obviously have to pay pension and employers' national insurance. So it's based on relationships. Is what about the threshold? How could we work that in to give me a better rate as an agency?
Yeah, absolutely. And salary sacrifice, what's your thoughts on that with regards to the increases?
I think that's probably going to be the biggest change for most employers, forget recruitment agencies only, because now all of a sudden, salary sacrifice does really matter. Before it mattered because it was about, I think, administration and the headache of, but where now you have a massive change in cost, salary sacrifice becomes a big advantage, not to ignore it. And I think if it's something everybody could apply, because everybody has a pension scheme, auto enrollment or otherwise, that they could apply salary sacrifice to save themselves money, i.e. the business, as well as save the candidate money. But what you need to think about is the implications to what salary sacrifice is, which is a change to contract, because you're actually getting somebody to sacrifice part of their salary exchange for that benefit that is, in this case, say, for example, the pension. So there's administration with it to go with it, and you probably need to seek help to do it properly. But yes, it's absolutely something to consider now with this change that will give a business an advantage, depending obviously on how many employees they have.
Also worth mentioning that national minimum wage may restrict the amount you can do, because you can't sacrifice obviously salary so that the salary becomes below the minimum wage. So there might be a flaw to what you can do there, but in essence, for anybody who sort of doesn't understand how that works, if you're going to make a payment into a pension scheme as a salary sacrifice, so it's an employer contribution rather than an employee contribution, then that comes off the top of what they're paid before the NI is calculated. So there's no NI on that, and that's an NI saving, and there's room therefore for the employee and the agency both to make a saving. There's a discussion to be had. It's definitely one to think about, as long as you still comply with the national minimum wage rules.
Yeah, and another one that we've discussed between the three of us was share schemes. So Matt, do you want to discuss a little bit more about how businesses could look into running some kind of share scheme and what that would look like and how it would help?
Yeah, sure. So the one of the key differences between employers and employees national insurance is that employers keep on paying it. There is no ceiling, whereas at some stage employees, their amount they pay reduces. So if you've got, I think this is applicable to usually the key people in your business, the highly paid recruiters or consultants, if their wage bill, you know, they're doing well, big bonuses, that kind of thing, you're going to pay more national insurance on it as an employer than you ever did before. So the key is, well, look at other ways that you can incentivize those sort of high flyers, if you like, the people who are key, and you can then look at things such as share-based reward rather than salary. There are a number of different types of share scheme and so on, but one of the key things is, as well as a saving on national insurance, they can be used to incentivize those people. They can be used to keep them in your business and stop them being poached by other people because you're giving them some kind of a stake. There's a lot of permutations to do with share schemes, but essentially it's looking at converting a relatively immediate reward that attracts a lot of national insurance into a slightly longer term equity-based reward, which can have some other advantages as well. So as well as just saving the NI, you might find it's worth looking at because there could be other advantages in terms of retention and motivating your high flyers. So I think that's quite a complicated area, but worth looking at, especially if you think you're going to have some, you know, big bonuses to pay out. They're going to cost you a lot of employers' NI.
Yeah.
I was going to say, Hannah, this is very, very popular in recruitment. I think in the recruitment sector, equity shares to employees are very common to retain big billers, like Matthew has said. So you're saving an eye for sure, but actually it's a very, very popular scheme for top billers because they know they can go elsewhere, they know they can do better, and that's a really good way to retain them. So you're saving on the big bonuses, but actually you're giving something more valuable for the future, both to the employee and for the business in terms of retention. Very popular. We do get questions on it quite a bit in this space.
We can help. We can help with that. I've done many share schemes over my career, done lots of valuations of companies for this purpose. Quite happy to, you know, take queries from people, whether or not you're a client. So, you know, if there's a question around that, absolutely get in touch.
Yeah, anything that or any queries that recruitment business leaders have around that, please do get in touch with us because we are more than happy and would love to be able to help and advise on anything like this. So far we have discussed kind of the direct methods that recruitment businesses can look at or review to help save on cost potentially or mitigate the pending changes that are coming into place. I think it would be good for us to discuss the indirect method, so not necessarily something internal, but other cost reductions that they could look at. So I think, again, one for you, Matt, and obviously Yves, chirp in with your comments as well, but would it be appropriate for agencies to review their current funding method and their funding costs?
Well, yeah, we've talked so far about ways you can mitigate the national insurance increase directly, both on internal your own staff and candidates that you're placing. Of course, you may find that for whatever reason, maybe the terms of business or your clients, you know, don't allow you to pass it on, that you need to make savings elsewhere in order to make your business model deliver the same profit that it was forecast to before those budget changes. And that means looking at other costs. Generally speaking, small, medium recruitment businesses are fairly simple in terms of their cost structure. There are not many costs. People is always the biggest. Probably the second largest, if you're going to, you know, look at the biggest first, is probably your IT cost or your funding cost if you are funded externally, if you're not using your own money. So those two are well worth looking at. You know, for example, combining your IT, various technologies that you use, to one provider who can offer an integrated type of solution may see a reduction in cost. changing your funder, looking at maybe a slightly different type of funding. Again, you may be able to simply get a better rate, or you may be able to find a slightly different funding model that works better for you. Maybe you don't actually need, maybe you're funding 85%, but you don't actually need all of that. You could move to perhaps a 50% model. Alternatively, if your profits are under pressure and if it's cash that becomes under pressure as a result of these changes, you could look at a 100% funding model. There are a number of different ways to do it out there, and every agency really has its own sort of needs. So that's a consultative process with, for example, Yves or myself, be happy to help anybody talk through, finding a model that fits them maybe better than the one they've got, or if they haven't got funding at the moment, whether or not it would be better if they did. As IT, I know Yves is extremely into all the AI and new tech all the time. So I think probably in that score, maybe you want to say give a few pointers about what can be done in the IT sphere in terms of recruitment these days.
Yeah, I think even just going back to that funding, I think you're absolutely right, Matthew, because the number of businesses we help save money in just funding alone, forget back office, is incredible, because a lot of people, a lot of recruitment owners, even with the bigger businesses, it's a bit like your utility bill. You don't think about changing it; it's working. The headache of going through that process. But actually, you probably signed that when things were way different in the economy. The interest rates were different back then, and it's something you need to constantly be reviewing in terms of what's right for your business, right? So the funding, I find, is probably one of the most critical areas that businesses need to look at, because there are multiple funding strategies in recruitment, right? If you look at the most common ones being 100% finance or an ID facility. Probably 100% finance we can call factoring. It's very similar. The difference in recruitment is that it comes with a back office element to it, right? That's good for businesses of a certain size, right? But a lot of businesses stay in that space because it's comfortable to do so, but it gets expensive over time, right? Then you look at other businesses that have an ID facility, or go for an ID facility when they're still very small and they still need to get a back office. And what they're looking at is the percentages which look lower, forgetting that those are percentages over base, also forgetting that they have refactoring fees on them, forgetting about the inflexibility of banks to deal with smaller businesses that you actually get from 100% finance providers, especially around trade insurance and things like that. So understanding how those parameters fit with your business is really, really key in saving you money, and it's worth visiting. And of course, as Matthew said, we do it a lot for many businesses, whether we're funding them or arranging a funding line for them. In terms of tech, a lot you can do there. We are helping businesses all the time. We provide tech. So what I'd say is, you can go for a service for, say, pay and bill, that you don't have to pay for the tech, right? Because why pay for a service and the technology, right? So you think, well, why don't I go for a provider who actually has the platform? So you have a pay and bill platform, you have like Matthew was saying at the beginning, a full integrated solution ecosystem. Could I be at that level of business where I'm getting the CRM, I'm getting the middle office, I'm getting the accounting package, all SaaS based, all in the cloud, and I'm getting them from one provider, and that includes the service fee. So that's a good way to look at it. Does that serve my business well? Does that provider take care of the complexity of my business? Because the complexity of the business is so key. It might be cheap, but it leads to unpaid invoices, which leads to working capital issues, blah, 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 blah. So actually it turns out not to be cheap, right? So just understanding those parameters for your business in terms of the complexity of your business and the systems you need versus the price. Who can provide that? Is there a provider that can provide all of it? Or will you have to, say, buy maybe an accounting package, but get the pay and bill from somebody as a service? Okay, so that's where I think businesses need to look. Do I buy out a service and not think about the tech, or am I so complex that I need to buy the tech separately? and maybe outsource the service, right? We provide all elements of this because we know there's not one size fits all. Businesses are so different, different sectors are different. You might be working with a VMS, and that creates different complications to spot business. So we provide a solution that caters for different sizes, different sectors, different tech requirements, different complexities. But all of this can save you money. You need to look at outsourcing, technology, funding. Those three elements, I think, indirectly can help you compensate for the NI cost increase, if indeed you can't pass it on to your clients. And if you can, then just set you up better for the future in terms of your bottom line.
Yeah, I think the technology piece, obviously, depending if an agency is looking at outsourcing, something that to consider if they think it's too complicated and they want to keep it in-house, is not only is it the cost of the tech itself, but it's the hardware, so the PCs and stuff that you're going to need to utilize if you are doing all of those processes internally. And one thing that we are finding a lot at the moment is agencies are getting in touch with us, and they might be using 5 different systems, maybe 5+ to be fair, just on the pay and bill process, and then the back office process on the finance side of things. So they're utilizing and paying for all of these different systems. None of it is integrated. So that alone, looking at 5 different systems, that's 5 different contracts with 5 different companies that aren't necessarily aligned with what the agency wants to achieve. And then they're not talking to each other. So then they're looking at the cost of the resource for the staff to process all of this, whether it's payroll, financial reporting, whatever it might be, but taking up so much of people's time. So yeah. I do think it's looking for what's right for the agency and what they want to achieve. And I think it's fair to say when we speak to agencies, a lot of the time they think they want SaaS, they think they want the software, payable software, but actually when it comes down to it and you get into the nitty-gritty and really their objectives are to save on cost, outsourcing is possibly more of a cost-saving option for them.
And I think you got to think about how agencies develop, right? So a lot of agencies start with very good billers, right? And what's the thing most billers, recruiters care about? It's the CRM, right? That's the most important thing. They care about the CRM, how well that helps them deal with their customers, deal with the interview process, deal with managing their candidates. Nobody really starts a recruitment business thinking, what am I going to do with the back office? And so if they grow up and get successful, what then happens is you get the growing pains of the back office. That's why you will come across, as you probably know, Hannah, large businesses that have never had a pay and bill system. They have a CRM and they have an accounting package. And you think, wow, how do you deal with the complexity in the middle for invoicing and payrolling different types of contractors? And they don't know any better because they've never had that before. They've grown up, and now the reason we're talking to them is because this complexity is getting them to talk to people and thinking there must be a better way of solving this problem. So it's very common that you find agencies have a really good CRM set up in the front. You know, the consultants know what they're doing, but the back end is a real mess. And our work with big agencies, medium size, and obviously supporting startups to grow up with us through the funding process really puts us in a good place to help such conversations actually make the right decision about which way to go when you've got a lot of growing pains to solve that are costing you a lot of money in people, in time, and more importantly, in working capital, because you can't turn your debt fast enough to improve your headroom.
Yeah, absolutely. And just taking a step back, Matt, to the funding side of things, there was a nice anecdote that you used when we spoke about this previously with construction agencies. And I just want to make sure we covered this off whilst we're on the webinar with regards to margin of construction agencies and how.
Yeah, I mean, really, it goes back to my earlier comment about the kind of very thin margins in certain sectors. So this increase in national insurance, on the face of it, is only is small in percentage terms, because people see 1.2% and go, oh, that's not very much. But you've got to remember, as a proportion of 15%, it's actually yeah, the increase in the rate is 1.2, but the actual amount you're paying has increased much more than, you know. So that, coupled with, as Yves was talking about, the threshold, means that if you are operating on very narrow margins, only single figure percentages, it's actually going to take quite a big bite out of your profits. And so it's those agencies which don't generate a lot of spare cash over and above what they're paying their candidates. Firstly, who really need to make sure they can try and pass that on, but that's not always possible, as we've talked about. But also, as well as just focusing on the fact that that's going to hit profit, it will also reduce the amount of cash you've got available to run your business. And that's where funding can help, because it can provide the cash. So, for example, it can provide a solution where you have to trade on your current rates until you win new contracts, because you can't change them. So it can help there. You know, we've talked a lot about the effect on profit of these changes, but let's not forget, it also means that you're paying money over to the inland revenue every month that you wouldn't otherwise have been paying, and that's a cash matter as well as just a profitability one. So that was really and that will affect, the thinner your margin is, the bigger that's going to be a problem. And that's when you need to consider, you know, have I got the right funding? Do I need some funding?
Yeah, that's brilliant. Thanks, Matt. So is there anything else? So we've gone through the direct methods that agencies could use. We've gone through the indirect methods and looking at cost saving and funding, outsourcing technology. Is there any other things that you guys would like to discuss, or we've not covered off today, that you think is useful for agencies to think about or gonna add value to them?
I think Matt mentioned something at the start, which was employment allowance. You know, employment allowance has changed, gone up from 5,000 to 10, so doubled basically. You'd be surprised. We come across agencies that don't claim this when they first come on to us, and they haven't had the advantage of actually the employment allowance before. So, you know, for small businesses, especially small recruitment businesses, that's a significant amount of money to save now, £10,000. So ask yourself, ask your provider, am I getting my employment allowance? Because you should be, right? Any registered business with proper employees is accessible to that. So that's something else that is right there available today and that has been increased, that can save you some money.
I would add that although we've talked about various strategies in the context of this increase in taxation, essentially, everything we've talked about can still improve your business, even if you aren't concerned about the increase in national insurance. You know, these are all areas which everyone should really be looking at, but everybody in business is really busy. You know, people don't find time for everything. Probably none of us ever do. So there is a trigger here to look at some of these things that puts them into the spotlight. Even if you're listening to this and thinking, I'm not concerned about it, all the things we've talked about will still help. So, you know, it's still worth looking at them. It's still worth picking up the phone and talking to us.
I think if you do nothing from this podcast or webinar, I'm not sure which one it is, look at your contract and make sure you can pass on legislation changes to your customer, because that's not something you want to be stuck with, because, you know, every government comes in with a different change. And if that change leads to more cost for you and you can't pass that on, whether that's holiday changes like AWR years back, or it's NI like now, it's something you want to pass on to your customer, because it's not inefficiency from you. It's a legislational change. So your contract should absolutely, as a minimum, cover you on that.
Yeah, and as we said previously, if any recruitment business leaders want any support or want to have any discussions with us on any of the stuff that we've discussed today, we will happily have those conversations and look forward to anyone reaching out to us. I think time-wise,
sorry, Hannah, do people reach out to you? How does that work? Because I think if you invite the world to reach out to us, that might be Bit of a problem. Hopefully we have an email for them.
Yeah, reach out to me via LinkedIn and I will field any queries either to Matt or Yves or myself, depending on the type of query that comes in.
That's it.
Guys, thank you so much for your time today. I really appreciate you sharing your knowledge and your expertise and the value that you will have added to the listeners. So really appreciate you taking the time out today. I know we tried to record this previously and we had a few technical errors, but we managed to get there in the end, and I think it's definitely been worthwhile. So thank you so much. For those listening, thank you for joining us today. I hope you found it useful. I will be back either next week or the week after with my next podcast. So I look forward to speaking with you all then. And yeah, thanks everyone for listening. Goodbye.
Thank you, Anna.